Hello, ladies and gentlemen. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Well, as always, I'm very, very excited to welcome you all to yet another promising edition on the Forex Morning Mastery. In fact, our end of the week session where we are going to be coming together to review how the market had behaved through the course of the week and how um, our positions went by, and of course, how we were able to capitalize on strategic trading opportunities during the course of the week. So, we are going to be reviewing that, and as well, we are going to be taking into consideration the fact that we are on the last trading day of the week. And for those of you who have been with me for a while now, you know how important such days is, as they are peculiar with end of the week trading activities where market participants may likely start taking profit off the chart as they get prepared for the weekend. And of course, when we consider an era where geopolitical tension is, anything could actually happen, and this could result into profit-taking activities, and this usually brings in a lot of volatility in the market. And of course, we do want to be on standby to capitalize on this opportunity. My own name is Sheriff Daramola, and for the next 40, 45, 50 minutes thereabout, I am going to be your host, as I will be taking you on a trading journey as always, where we shall be looking at the financial landscape from both through the lens of both technical and fundamental perspective. So I'm very excited to welcome you all once again. And for those of you who are joining us for the first time, who may be wondering what this is all about, or what is it that we really do here on the Forex Morning Mastery. Well, the Forex Morning Mastery is a platform where we all come together as a community to do follow-up and review our current trading positions in preparation of both the London and the New York session. And this happens 3 times in a week: Mondays, Wednesdays, and of course Fridays. Now, I also want to clarify that this is not a signal service platform, but instead an avenue where we all come together to have a deep understanding into what is really going on in the market, using our basic tools such as trend lines, key levels, and chart patterns to understand the behavioral patterns of market participants in that market environment. And of course, this helps us to this also serves as an educational tool for us to know how to use price action in understanding the market behavior. So our aim here is to equip ourselves with the knowledge and skills necessary to make informed trading decisions independently. And trust me, the more time you spend with us in this community, the better you will become at comprehending my analytical approach, and of course utilizing that information you gather here in this community to enhance your own trading decisions and of course trading strategies. So once again, I do welcome you on board and I encourage you to actively engage in the comment section. You can ask me anything that is related to the financial market. Of course, I'm here and willing to be of help in that regard. So, and if, of course, if you have found the content helpful and useful in making your independent trading decisions, kindly give the video a thumbs up. Your likes are very valuable to me, and of course, it also helps the algorithm promote the video to a wider audience of traders who may find the content beneficial to them too. And thank you very much as you do so. And I just want to ask here, I hope the sound quality is coming out very well. Please let me know in the comment section. I would love to see your feedback as regards to that, because I'm still feeling that it's not up to the standard I usually maintain. So please let me know in the comment section if the sound is good or not, so that I can do the necessary adjustments so that we can have a good experience. I see you, Torres Master. Good morning to you. It is Friday. That's interesting. I hope all is well, very good. Thank you very much, and trust you're also doing very well too. I also see you, Constant Tameklo. Good morning to you. Glad to have you around with us this morning. So please let me have your feedbacks right in the comment section as regards to the sound quality. So with that being said, here we shall be diving right into the business, and as usual, the first thing we normally do every morning is to keep tabs with the fundamental factors that is likely going to be influencing the sentiment in the market. And of course, by checking on the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and, most importantly, timing that will allow us to strategically position ourselves for the next move, if prior, during, and even after the economic event. Now, based on the asset we are looking at for this week, we have been focusing on high impactful economic events from both the United States and the United Kingdom economic docket. And except for days where we do not have a high impactful event, we check out mid-tier economic features to have a broader view into what markets have been looking into. Well, this week has been quite an interesting one. Remember, we've had a bunch of high impactful events through the course of the week, but let's look at the major highlights that has served as a key determinant factor of the behavioral patterns of market participants. Now, on Tuesday, June 11, we had some labor-oriented data from the United Kingdom. In fact, we had the average earnings, we had the claimant count change, we also had the employment change, and of course the ILO unemployment rate. And based on what we were able to come up with from those data, here's the fact that the labor sector in the United Kingdom has been struggling in the last 1 month, as all the data we received came in below market expectations, and even some of them came in below the previous month. And the market economists are suggesting that probably the reason why this is so is simply because of the high interest rate in the United Kingdom, which obviously has been affecting business due to the high borrowing cost. Now, due to this reason, we've seen a lot of layoffs in the labor sector in the United Kingdom, which has dovetailed to what we saw during the beginning of the week. And of course, the expectation that the Bank of England may likely reduce the interest rate coming up next week is right on the table. Now, due to this whole situation here, the path of least resistance for the pound sterling is looking very bearish, especially when we consider the hawkish remark from the Federal Reserve as regards to interest rate decisions in the United States. Now, though the first half of the week for the pound sterling was very positive, but since Wednesday, things has not been looking very rosy. So we are going to be looking at how the market has reacted to this event. We are going to be looking at that in the chart, and of course use that information to strategically position ourselves for today's trading session. Then on Wednesday, we had some mid-tier economic features from the United Kingdom as well. The gross domestic product and gross domestic product month on month, that is for the month of April, it came in flat. So it shows that there was neither contraction or expansion in the United Kingdom. That's another red flag for us all. Then we also had the industrial production and manufacturing production from the United Kingdom all coming in lower than expected. Then the major highlight for the week came in on Wednesday from the United States, and that was the consumer price index, which is considered to be one of the significant inflationary gauge data from the United States. And of course, this data gives us an insight into the inflationary pressure in the United States. And of course, the data came in below market expectations, giving us signs that inflation may likely be thinning out in the United States, hereby increasing the chances that the Fed may likely cut interest rates anytime soon. However, on that same day, we had the Fed interest rate decision, and we saw that the Fed kept interest rate unchanged at 5.5%. So it's a range 5.25 to 5.5%. Now, the Fed chairman had a speech immediately after the interest rate decision, and one of the major highlights from what is said on that day is as regards to the higher interest rate hindering economic growth. And of course, he also mentioned that there is likely going to be one interest rate cut later this year. And he also emphasized that the decline in price pressure in the United States is it's a welcome idea, which shows that the monetary policy has been effective, and is hoping that things will continue the way it is, and that if it is based on data coming in from the labor sector, they might likely cut interest rate earlier than expected. Then later on, yesterday, Thursday, June 13th, we had some other high impactful event like the producer price index, which gives us an insight into the average change in prices in primary market of the US by producers of commodities in all states of processing. Now, the data here actually it's also an inflationary gauge data. It also came in below market expectations at 2.3% and also below the previous month. So from all ramifications, it appears that inflation is gradually thinning out in the United States, and this is a welcome development, and it could likely incite some rate cut anytime soon. But as it is right now, interest rate is still high and will be maintained for an extended period of time, pending the time they see significant figures. Like the Fed chairman said, that they will be looking for labor-oriented data to emphasize that truly inflation is thinning out. So I still think that this this rate is going to still continue for a month or two. So interest rate is still maintained high. Now today, Friday, June 14th, we are going to be looking at one high impactful event from the United States economic docket, and the event we are looking at is coming up in about how many hours from now? That's about 4 to 5 hours from now, and it's the publication from the University of Michigan, and this is the Consumer Sentiment Index. Now, for those of us who do not know what the Consumer Sentiment Index is all about, where you see this data here gauges the prevailing sentiment and confidence levels among consumers within the United States, and it of course provides us with insight into the potential shift in economic conditions. And of course, changes in consumer sentiment can influence spending patterns, impacting various sectors and markets in the United States. Now, if this data comes in higher than expected, it shows that there is a strong confidence of consumers in the US economy. But if the data comes in lower than expected, it's a sign that consumers are not feeling confident in the US economy, hence they reduce their spendings. Now, if we look at the data from last month, remember we had a woeful report showing that the consumers were not feeling confident in the US economy, as we saw the data come in below expectations last month at 69.1. Now, based on what is on ground right now, economists are projecting that we are going to be looking at 72, which is a little bit higher than the previous month data. So we are going to be looking forward to see what the actual data is going to be like on that one. Will it be just as expected or below expectations? Then another event I would also want us to look at from the United Kingdom, though it's a mid-tier economic feature and it had already happened about 12 minutes ago, and that is the consumer inflation expectations in the United Kingdom. Now, this data is a percentage that consumers expect the price of goods and services to change during the next 12 months. Now, it's a survey anyways, but it also gives an insight into what the United Kingdom economy is looking like in terms of inflationary pressure. And whatever this figure gives us, it's a little bit insight into what may likely happen as regards to the monetary policy of the United Kingdom. Now, if we look at the previous month, it came in at 3%, and based on what is on today's report came in at 2.8%. So it's a sign that inflation too is gradually thinning out in the United Kingdom, and this may likely incite the idea of interest rate cuts next week. Now remember, the ECB reduced their interest rates last week. The Bank of Canada also did so, and we're also looking at the SMB, that is the Swiss bank, also is also considering reducing interest rates. So all major banks have been reducing interest rate, and it's very, very likely that the United Kingdom will reduce interest rate as well, making the path of least resistance for the British pound to be to the south. Then we also have some other mid-tier economic features today, which we also want to be looking at, and these are speeches, of course, from Fed Reserve officials. We're having one in about 12 hours from now. That's from Goolsbee. We're also having much more later in the day from Cooks too as well. And this speeches usually gives us an insight into the economic outlook and potential future interest rate decisions in the United States. And we want to be looking forward to this event as well, as it will help us prepare for next week's trading session, especially when we are looking at assets that involves the US dollar. So for today, Friday, June 14th, this is what we are going to be looking at for today. So I encourage us all to mark out the timing so that we can be around to use the structure we have on the chart to strategically position ourselves for the next move. And another thing I would also like to emphasize, though I've been talking about this countless of times here in this community, is that major key players in the market usually have inner cycles inside this department, hence they have first-hand information prior to this event happening. So because of this leverage they have, they usually build up a position ahead of this event. And as retail traders, what we are doing is to look out for their footprints so that we can use them to understand what is likely going to happen when the event comes into play. So with that being said, let's dive right into the business. I see you, Tamiklo. Thank you very much for that feedback. I really appreciate that. Good morning, Wokocha Kingdom. Trust you're doing very well too. So with that being said, here we will be diving right into the business, and as usual, the first asset we are going to be looking at this morning is going to be the USOILSPOT. And for the USOILSPOT so far this week, we have done very, very well on this particular asset. Remember, we have been buying the USOILSPOT through the first half of this week. Remember, we bought it right above the $75.85 level, and of course we did had multiple entries. We had about three buy positions along the line. At the end of the day, we were able to scoop in a minimum of 400 pips in profit during the first half of the week, and since then we've seen some choppy market condition in this market. Now, for the sake of clarity and for educational purposes, and for the sake of those who missed out on our earlier sessions, let's quickly run through what really happened at the beginning of the week that led to the decisions we made. Now, I also want to buttress here that I will not be taking the higher time frame. We already done a top-down analysis on this asset on Monday, and if you in any way had missed out on that session, you can check the link right in the description box of this current video after the session to have a brief understanding into how we were able to identify our key level, which is one of the most important parameters we use to guide our trading decisions for every week, and of course the major trend and the likes. So check the link right in the description box below. So with that being said, let's run through what really happened. So zooming into the current structure, remember we had our key level situated right around the $76 area, and of course you know how important our key levels are. has to play a major role in guiding our trading decisions for the following week. Now, if price trades above our key level, we look out for patterns and structures that supports the idea of buying. But if price drops below the key level, then we want to be looking out for selling opportunities. Now, besides the key level was the resistant line of that descending channel we identified on the 4 hours time frame, which is playing the role of a descending trend line on the 1 hour time frame. Now, with these two features on our chart on Monday, we were able to try and understand how market participants were thinking at the beginning of the week. So the first 10 to 12 hours of the week, we saw how price action was confined within that range between the $75.85 level and the $75.25 area, giving us an insight into the prevailing uncertainty at the beginning of the week. And for those of you who have been with me for a while now, you know how we use our range bound structures whenever we identify them. Due to the indecision going on, we usually exercise patience and wait for the market to finally make a directional decision, which usually comes in the form of either a breakdown of the support line of that range to give us an opportunity to sell, which obviously never happened, hereby negating any idea of considering selling the commodity. Now, the breakout of the resistance line is a confirmation that price may likely continue to the upside. So as a result of this, we were able to capitalize on our first buy position for the week at the breakout of the $75.85 level. In fact, if you missed out on that opportunity, the market was kind enough to come back, retest the structure before continuing the momentum to the upside. Then we also maximized the potential of the bullish move by adding multiple entries. We had one at the $76 area. We also added another one at the $76.50 level. So as at the first trading day of the week stroke the second day, we had about 3 buy positions running in profit, dovetailing to over 400 pips in profit. And of course, I can remember mentioning that we move all our stop losses to secure the current buy position, and doing that appropriately, we were taking out with a minimum of 400 pips as market began to consolidate during Tuesday's trading session. Now, during our live session on Wednesday, we did acknowledge a range bound structure after identifying price action within the $78.20 and the $77.25 area, giving us a range bound structure, which we were looking at a potential uptrend continuation if price action ever breaks out of that resistant line at the $78.20. We had the privilege of joining that buy move. Remember, we bought right here and we saw price climb into the $79.30 level with about 100 pips in profit from that particular level. And we also added another buy position at the breakout of the $79 level, and that one also moved about how many pips? About 30 pips thereabout before the bearish momentum came in. And I do remember telling us all on my Telegram platform that we move all stop losses, securing that position, and if you had done that, we must taken out with a minimum of 80 pips thereabout. And for those of us who are part of this profitable journey, well done and kudos to you. Now, not until yesterday we begin to notice that buyers were losing that momentum, and in fact, following the EIA report that came in on what day was that? I think it's on Wednesday. So we had the EIA report come in telling us that there was an increase in crude oil stockpile. Now, for those of us who do not know, there is this weekly report that comes in from EIA and API, and they tell us how much crude oil was stored in the US crude oil stockpile scenario. Now, whenever there is a high crude oil stockpile, especially higher than the market expectation, it's a sign that there is high supply. That is, the demand in the market is not strong enough to eat into the supply, hence this usually exerts selling pressure on crude oil prices. But if the crude oil stockpile drops significantly, maybe into negative territories, it's a sign that there is much more demand in the market eating to the supply in the market, which is a sign that price will continue to rise due to the scarcity of that commodity. It's a simple economics. When demand rises, you know what happens, price usually rises. So what we had last for the previous week was an increased crude oil stockpile, which usually exerts selling pressure on crude oil prices. And as a result of that information that came in on Wednesday, we saw signs that buyers were losing momentum in this market, and this resulted into this whole choppy market conditions where price was finding some lower highs in this particular area. And as a result of the series of lower highs, we were able to spot a descending trend line, which we said we will be using to guide trading activity for the second half of the week. And as a result of this trend line, we were selling the US oil spot at the breakdown of the $78.20 level. Now, for those of you who saw my commentary this morning on my Telegram platform, I did mention that we should move all stop losses, secure this position, as you will see that in the last 24 hours in this market, sellers have been struggling to break through that $77.50 area. And in fact, when we fast forward into the Asian session, we saw that the inability of sellers to break through increased as we saw an higher low here. Now, whenever we see higher lows on our current market structure, it simply tells us that buyers are gradually gaining momentum behind the scenes. Hence, it is very important that you secure any sell positions you have. So, as a result of this observation, I did mention, let's move all stop losses and secure this one. I do hope you've moved all your stop losses accordingly. So the worst case scenario on that sell position will be at break even if we get taken out of that position. Now, with a well secured position at this juncture, how do we intend to strategically position ourselves for today's trading session, especially when we are looking at the last trading day of the week, which usually comes in with profit taking activity, as majority are not sure what may happen during the course of the weekend, so they would like to take their money off the market. Now, there are some various factors behind the scenes that we also need to take into consideration while looking at things from a technical standpoint. Now, if we look at the following the US Energy Information Administration report as regards to their crude oil stockpile, they also gave us a report as regards to their projection on oil demand growth for the year 2024. And from the report we saw, they revised their figures and increased their projection to 1.1 million barrels per day consumption of oil, as against their previous estimate of 900,000. Now, for them to have increased this forecast, there must be some things they've been seeing in the market that suggested this projection. And additionally, the OPEC Plus 2 also maintained its 2024 forecast for a robust growth in global oil demand. And if you take it a step further to try and understand why this projection is high, at least for the second half of the year, it's quite simple. There is the expectation of increased travel and tourism in the second half of the year. You know, during the summer, we have travelers. People travel across the globe, and when you travel, there is a high demand for fuel, and this will definitely dovetail into high demand in US crude oil. Hence, the path of least resistance is looking very bullish for the US oil spot. Now, in addition to that bullish expectations, we cannot ignore the potentials that sellers can also come in at any point in time. Remember, we saw the FOMC report that came in on Wednesday, and the decisions to maintain interest rate at 5.25 to 5.5% for the 7th consecutive time. And we all know how higher interest rates usually hinder economic growth, and of course it also negatively impact oil demand. And one way it impacts oil demand, I usually mention this, is as regards to when there is higher interest rates, there is the US dollar tends to increase in value due to um, the attraction of investors to put their funds in the US dollar. And if the US dollar continues to increase in value, and considering the fact that the US oil spot is a US dollar denominated commodity, the US oil spot becomes very expensive for other currency assets to buy, as before they can buy the US oil spot, they need to change their local currency to an expensive US dollar before they can buy the US oil spot. And of course you can tell what will happen. There will be decreased demand in that commodity, hereby exerting selling pressure on oil prices. So we are caught within two market sentiments right now, one which is supporting an increased growth in oil prices due to tourism and travel for the second half of the year, and on the other side we have the idea of higher interest rate, which is expected to dampen the crude oil prices. Now, with these two dynamics in the market, how has market participants reacted and digested this data? Are they leaning towards selling momentum, or are there chances that the bullish momentum will continue today? Now, if we look at things from a technical standpoint on the chart, since the beginning of the week, price action has been very bullish. And remember, we saw price break out of the resistant line of that descending channel we identified on the 4 hours time frame. I know some of us will want to know why we know what this is all about. Let's scale up into the 4 hours time frame so we can look at this together. Now, if we look at the 4 hours time frame here, remember we had this descending channel after connecting the series of lower highs and lower lows since the month of April. That's about 2 months ago. So we have the resistant line of the descending channel, and then we have the support line of the descending channel right here. And look at what happened at the beginning of the week. We saw how price broke out of the resistant line of that descending channel to incite a strong bullish move to the upside. And if we look at things from a technical and theoretical perspective, whenever price action breaks out of a key structure like this, we expect that at some point in time price may actually come back, retest the structure in an attempt to continue the uptrend move. Now, if that is going to be the case, then we are likely going to see price drop about how many pips? About 300 to 350 pips thereabout into the structure before the uptrend momentum happens. So you can see how we cannot ignore the potentials that sellers can actually come into this market. And considering the higher interest rates, this could be a supporting factor. However, the path of least resistance based on the projection for this year, considering the travel and tourism, the momentum is still very bullish, but the path through which the momentum will continue is what we do not know. Is it going to be a form of retest before the bullish momentum continues, or are we going to see this whole price movement transition into an uptrend continuation pattern around this area to incite that uptrend move? Now, for us to understand and navigate through this dynamic, we need to understand the character of market participants within this consolidation phase. Now, scaling back down into the 1 hour time frame, we begin to see things much more clearly. And if you remember vividly, I said here that since the second half of this week, the market has been looking bearish. We've seen some series of lower highs here. However, despite the fact that price has been finding lower highs, giving us this descending trend line, you would agree that we are yet to see a lower low. Instead, we are finding higher lows here. This is the lowest point, and then we saw a higher low at this point, and of course another higher low here. So for us, it's a sign that buyers are gradually gaining momentum behind the scenes. Now, in as much as we will maintain a bearish bias here, that is if price continues to maintain pressure below that descending trend line, we cannot ignore the potential that buyers could come in if that descending trend line is breached and broken to the upside. So if price breaks out of the descending trend line, and if price comes back, retest structure, giving us good confirmation, we will be willing to buy the US Oil Spot, and of course look out for more buying opportunities at the breakout of the $79 level. So that is how we are going to be maintaining a bullish bias here. Now that reminds me, for those of us who are new with us here, there are two ways through which we capitalize on breakout of structures. Now the first one is for those of us who have been part of the profitable journey since the beginning of the week. Now if you are profitable on the US Oil Spot, you can afford to place a buy stop order above the $78.20 level. What this simply means is that we are testing waters around that area, and if it turns out not to work, it's not a problem, as we are only risking some of the profit we had made. However, if you are new with us and this is your first position on the US Oil Spot, you do not have anything to leverage on, then I will suggest that you exercise patience and wait for price to give confirmation before jumping into the buy position. So a retest of structure will be a good confirmation to join the uptrend move. Now, if price does not break out of the descending trend line, then the path still looking bearish, so we will be looking out for more opportunities at the breakdown of the $77.25 level to maximize the potential of this bearish move. So this is what we are going to be looking at on the US Oil Spot for today. As you will see, our center of focus is around the $78.20 level, which beautifully shares a confluence with that descending trend line here. So let's see how the market is going to react to the structure as we look forward to the US Consumer Sentiment Index coming up later today. So this is my simple view on the US Oil Spot. Let's see how the market is going to react to this trend line. And of course, I encourage us all to mark out these levels accordingly on our chart, as we will be needing them as reference point to guide our independent trading decisions for today. So if you have any questions whatsoever, feel free to let me know in the comment section. If you need some further clarifications, please let me know in the comment section. So as always, I will be taking the next 10-15 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. Stay tuned in, guys, and do not forget to give the video a thumbs up. All right, and thank you very much as you do so. Okay, so I see you, Taeyang. Good morning to you. I see you. Okay, you're welcome, Wokocha. All right, so in the absence of no questions, I want to assume that we are all on the same page, and all I've said so far has been quite explanatory. So with that being said, let's move right into the next asset on our watch list. Stay tuned in. So the next asset we are going to be looking at this morning is going to be the GBPUSD, that is the British pounds against the US dollar. And of course, since the beginning of the week on this asset, we've done pretty well on the GBPUSD. We've bought this asset at some point in time, riding the momentum all the way into that 1.28600 area, the highest point in the last couple of months. Before the momentum dropped to the downside. And of course, yesterday we were able to capitalize on some selling opportunity, which is currently doing very well at this point in time. Though we had a loss yesterday, we capitalized on some buyer positions. Okay, let's do this. Let's run through how the week started for us all, for the sake of those who missed out on our earlier session. And it could also serve as an educational tool to understand how to use price action. So we used a different chart at the beginning of the week. Now that reminds me, we are only going to be looking at the 1 hour time frame, which is our execution time frame. Remember, we've done a top-down analysis on the GBPUSD, and if you in any way missed out on the top-down analysis, you can check the link right in the description box below. So right here on the 1 hour time frame at the beginning of the week, we had a simple trading setup which we used to guide our decisions for the first half of the week. Now right here on the 1 hour time frame, we had the ascending trend line that we identified on the higher time frame right here, and of course we saw price following the US NFP data last week Friday. We saw price break down the ascending trend line, and of course when price break down ascending trend lines like this, we usually look out for bearish signal like breakdown, retest of structure to join the decline to the downside. Now in addition to the structure here, we had this range bound structure where for the first 8 hours of the week, price was confined within the 1.27310 and the 1.27075, giving us a range bound structure. And of course, you know how we treat our range bound structures in this community. We wait for price to either break out of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. So the first day of the week, we were able to sell below the 1.27075, where we saw price drop for about 18 to 20 pips thereabout. And after moving our stop losses to break even, we got taken out at break even. Now we were looking at the potential that price may come back, retest structure to continue the downtrend, which of course triggered a sell position here, which unfortunately went into a loss. Now immediately, I think about an hour or two into the New York session on Monday, we begin to notice that sellers are losing the momentum. First signal was the hammer candle here. We saw an hammer candle here, and the second signal is this engulfing bullish candle. And as a result of this, I was of the opinion that we might, and the third one was the failed attempt by the sellers around this area. Now, as a result of all of these three factors, we decided that we will be capitalizing on buying opportunity if price action ever breaks out of this descending trend line here. Now we saw the breakouts to to join the breakout, we had buy stop orders above the 1.27150, which beautifully shares a confluence with that descending trend line. So since then, we have been buying the GBPUSD right above that structure, and in fact we were privileged enough to continue the momentum. Remember, we had multiple levels. We had it more at the 1.27310 and of course the 1.275, riding it all the way into the 1.286. So we were able to scope in close to 200 pips on that one before the bearish momentum began. So on the bearish momentum, I actually missed out on the bearish momentum. I did mention that due to that impulsive move, that the bearish move could be a retracement where price will come back into this buy window we identified around the key level to continue the uptrend move. And as a result, we were looking out for reversal pattern within that key area throughout the second half of this week, which failed, of course, leading to one stop loss again. So we had 2 stop losses on the GBPUSD for this week. Now this is the buy window right here, and this happened yesterday during the New York session, as we saw this failed buying attempt triggering our buy position, and of course it didn't do very well at all. Now we saw price break down the key level. Remember, we marked this level here, that a breakdown retest of the structure will be all we need to join that decline to the downside, which obviously has happened. And currently we have a sell position running with a minimum of 30 pips in profit. And for those of us who did capitalize on this opportunity, well done and kudos to you. So what we are going to be doing right now, considering the fact that price had moved significantly in our favor, is for us to move all stop losses to secure this position. And if you would ask me, I suggest that anywhere around the 1.274 seems most appropriate to move all stop losses to. Anywhere around that area. Remember, we do want to be giving enough breathing space for price action to move around. Now, with a well secured position at this juncture, what is going to be our plans for today? Are we going to continue selling, or are there chances? Oh, sorry. Sorry about that. I tampered with the cord to my microphone, so the sound went out. I do hope we are back on. Please let me know in the comment section if you can hear me clearly. Let me know, and if you can, please let me know too as well, so that I can do the necessary adjustment. So at this point in time, are we going to continue selling, or are we going to be preparing for any potential uptrend continuation after considering that bullish momentum that started this week? Now, there are some various factors behind the scenes that we also need to take into consideration as well, especially from the US economic data to the United Kingdom economic data. Now, during the course of the week, we saw the US core consumer price index and the producer price index report for the month of May, and these 2 reports are considered to be an inflationary pressure gauge. Now, the data came in below expectations, giving us clues that inflation may be thinning out in the United States economy. Now, despite this soft report, the Fed chairman still remained hawkish as regards to interest rate decisions. We saw that the interest rate was maintained, left unchanged, between 5.25 and 5.5%. And the Fed chairman went further to acknowledge the fact that the inflation is thinning out. It's a soft inflation report, and he also emphasized that officials want to see sustained decline in price pressure before committing to any rate cut. So what they are simply saying here is that the decision to cut interest rates will be data driven. So they are adopting a wait and see approach to see subsequent data from the next month to see if truly inflation is thinning out before they can start cutting interest rates. So what this simply means is that we are going to be having a higher interest rate for an extended period of time, which obviously will favor the US dollar. Now, if we consider the poor labor figures from the United Kingdom at the beginning of the week, things are not looking very positive for the pound sterling at this point. And considering the hawkish remark, I still think the path of least resistance for the GBPUSD is to the downside. Now, what manner is this downtrend going to take? Or if it's going to go to the upside, what path is it going to take? Now, let's look at things from a technical standpoint. Now, to guide our trading decisions for today, we are going to be using the current structure we have on the chart. Now, looking at what we have here, you will see that price action is gradually approaching the 1.27100 psychological area. And in fact, if we go to the left hand side, you will see how this level had played a significant role since the beginning of the week. Remember, last week we saw this impulsive bearish leg after the US NFP data dropping into this area, and since price came here, you will see price has been finding momentum to the upside. Anytime price comes here, we see momentum to the upside, and look at what is going on right now. Price action is back into that zone. How will the market react to the structure? Are we going to see another uptrend from this area, or is it high time that price will break down the structure to incite more selling opportunities on the against the GBP, the British pounds today? Now, if we consider the fundamental factors behind the scenes, like I mentioned earlier, the path of least resistance is still looking very bearish. So I'm still looking forward to more selling opportunities at the breakdown retest of the 1.27100 area. Now, in addition to this is this newly identified descending trend line. Of course, if you look at the structure since Wednesday's trading session, you will see that price action had consistently and uniformly found lower highs in this market. Now, connecting the series of lower highs, we have this descending trend line to work with. And you know how we use our descending trend lines in this community. As long as price action remains below the descending trend line, we will continue to look out for patterns and structures that supports the idea of selling that asset. Now, the only condition that will make us consider buying the asset when we have a descending trend line is for price action to breach and break out of that descending trend line. So if we relate this understanding to what we have on the chart, you would agree with me that we have no other choice than to continue to look out for selling opportunity. Now, what path will this bearish momentum take? We may see price come back to retest the trend line in an attempt to break down and continue the downtrend. That is one scenario. That is why I mentioned that we move all stop losses while we give enough breathing space for price action to move around. Now, so we are going to maintain a bearish bias on the GBPUSD today. However, if we consider this continued buy pressure from this area since last week Friday, we cannot ignore the potential that buyers could also come in at any point in time. Now, what is the condition that will warrant us to buy and feel comfortable in a bullish position? Well, the first condition for me that will make me feel comfortable buying is for price to breach and break out of that descending trend line. Now, we are not just going to be jumping into a buy position as soon as the breakout happens, as we will need some confirmation to happen. Remember, the last 72 90 hours in this market, the market has been finding series of lower highs, emphasizing the strength of the sellers at this point. So if we are considering buying at any point in time, we will need price to break out and retest the structure for the sake of confirmation before jumping into any position. So I would like to see a breakout retest of the trend line happen, where continued buy pressure above the trend line will be a good confirmation for us to continue the uptrend, which I doubt will happen. But if it does happen, let's be on standby to capitalize on that move. And of course, we have multiple levels like the 1.2775 and the 1.28100 area, where we will be hoping to add more buy position if price breaks out of those structures. But trust me, I will be with you all in the comment section of both my TradingView and Telegram platform to give us updates as at when due. But this is what we are going to be using to navigate the current market conditions ahead of today's consumer sentiment index report. So this is my simple view on the GBPUSD. If you have any questions or you need some further clarifications, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off. Let's see if there are any questions whatsoever before we move on to the final assets on our watch list for today. Stay tuned in and do not forget to mark out these levels accordingly on your chart, as you will be needing them as a reference point to guide your independent trading decisions. And if you have found this content helpful and useful, kindly and do not forget to give the video a thumbs up. Your likes are valuable to me, and in fact it also helps the algorithm promote the video to a wider audience of traders who may find this content beneficial. This is one way you are supporting this community to grow as well, and thank you very much as you do so. So as it is right now, we have over 11 people on board, but we have only 6 likes. Please let's allow the likes to tally with the number of people on board. Thank you very much. All right. So in the absence of no question, okay, I see you, Kai Zong. Good morning. Thank you very much for that feedback. I really appreciate that. So in the absence of no questions, I want to assume that we are all on the same page. So I wish you best of luck on the GBPUSD. So let's move on to the final asset on our watch list for today. Stay tuned in. So the final asset we are going to be looking at today is my favorite amongst them all, and that is the XAUUSD, popularly known as the gold spot. And in fact, another interesting development is gradually evolving on the chart as we look forward to the consumer sentiment index today. And I think that the market is gradually coming to make a decision as regards to whatever direction price action is going to be heading to ahead of the weekend. And yeah, since the beginning of the week we have done pretty well on these assets. I remember we had a different chart at the beginning of the week where we did capitalize on some buying opportunity. For the sake of clarity, let's run through this quickly, and let's look at what really happened at the beginning of the week. Now, if you remember, right on the higher time frame, we had an ascending trend line which has been supporting that bullish momentum for about a couple of months or so. Let's look at it together and see what that is looking like on the 4 hours time frame. So this is the 4 hours time frame right here, and after taking into consideration the character of price action since the beginning of the month of March, it is quite obvious that the market has been very, very bullish. And as a result of this, we had this ascending channel after connecting the series of higher lows, as you will see here. And then we have the support line of the ascending channel right here, and of course we have the resistance line of the ascending channel, and of course we also have an imaginary line right within the channel, slicing that channel into equal halves. And of course that line as well also has an influence on the character of price action since the month of April. Now, with this whole scenario here, and considering the fact that price is within an ascending channel, the path of least resistance for gold is always looking bullish. Now, to further emphasize the strength of the buyers in this market, we went on to take into consideration the character of price action since the second half of the month of April. That's an historical data of about 7 to 8 weeks thereabout, and you will see that every attempt by sellers to break through that zone within the 2,325 and the $2,285 area failed, as you saw buyers take over the market as soon as price action gets into that area. Now this continues into this week, as you will see. Every time price comes in, even despite that strong impulsive bearish leg following the US NFP data that came in Friday, we saw that as soon as price got into that demand zone, we saw how sellers found it difficult to break through, and this continued into this week. As you will see, buyers keep on pushing price from that particular area, and of course when price is within a demand zone, it makes a lot of sense to always look out for buying opportunity. Now, coupled with the fact that price is still within the ascending channel, we had a robust demand zone to support an upward trajectory. So I needed us to see this so that we can all be on the same page on the 1 hour time frame. So back into the 1 hour time frame, at the beginning of the week we saw this whole situation here. The week started with a positive note, of course, and we saw price action confined within the 2,302 and the $2,287 area to emphasize the prevailing uncertainty in this particular market. And of course, you know how we treat our range bound structures. Whenever they happen, we exercise patience, waiting for the market to either break down the support line to give us an opportunity to sell, which obviously never happened, negating any idea of considering selling, and a breakout of the resistance line will give us an opportunity to buy. And as you will see, price had consistently found buying power above the resistance line of that range bound structure we identified at the beginning of the week. And for the fact that price is sitting on a robust demand zone we identified on the higher time frame, this further supports the upward trajectory of gold prices. So since the beginning of the week we have been buying the gold commodity. Now fast forward to yesterday's session, so I would like to just run through this quickly because of my limited time. I hope you bear with me on this one, but if you still feel you want to have an insight into each of our entry point during the course of the week, you can check it out on my TradingView platform and of course on my Telegram platform. So right here on this current chart we have here, remember we had this new chart identified during our live session on Wednesday, and after considering the character of price action since last week Friday, you will see that the market has been very bullish, except for yesterday when price action broke down this ascending trend line to incite some selling opportunities. Now this was followed by that data from the US, that is the PPI data, which came in below expectation, inciting the idea that interest rate may be cut anytime soon. And so that led into those choppy market conditions, leading into a bearish move to the downside. Now from a technical standpoint, when price breaks down a key structure like this, we expect at some point in time price may come back, retest the structure to incite a downtrend move. So we would not ignore the potential that sellers could come in at this point. And of course, if price climbs back above the ascending trend line, it will be good opportunity to maximize the uptrend continuation. Now, despite price action dropping into the lowest point in the last 1 week, that is the $2,300 area, we saw that during the Asian session we witnessed some deep buying, giving us an insight into the resilience of the safe haven asset. And in fact, there are various factors behind the scenes that could probably have influenced the sentiment around this renewed buying pressure we noticed during the Asian session. One of which we might not know until the end of the month is the possibility that China may have resumed its gold reserve buying, and which could lead into price skyrocketing to find new highs again. That's another possibility. We can't have that report until the end of the month, so it's just a projection. I'm not saying that is what really happened. Then other factors behind the scenes could be the current geopolitical tensions in the Middle East, the Russian-Ukraine war, and of course the political uncertainty in Europe, considering the French elections. So this factors here could probably support an uptrend scenario. However, we are not going to be getting too carried away with this idea, as the possibilities of sellers too is also in play, considering the recent unchanged interest rate decision despite the soft US economic data that came in this week. And of course, we also had the Fed chair, which will also buttress the fact that though the interest rate inflation is gradually thinning out, but they will still need some more figures to, especially from the labor sector, to confirm that truly inflation pressure is gradually thinning out in the United States. And of course, this will support a positive traction in favor of the US dollar. However, there is one more thing I would also like to talk about here, which is the US Treasury bond yield at this point is not doing very well. And we know how the US Treasury bond yield is directly proportional in value to the US dollar. Now, if the US Treasury bond yield is not doing very well, it is expected that the US dollar will follow suit. And this is one of the major reasons why I still think the path of least resistance for gold is looking bullish. But remember, this is just an a thought process. It's just an opinion, which is not what is really in the market. So it's an opinion. So now if we look at how the market participants have digested these fundamentals and how they are going to be responding to them on the chart, we will be able to come up with something by looking at price action itself. Now, if I personally bought this one right here at the 2,308 this morning, breakout retest of structure, and I did mention that we should be looking at adding more buy position at the breakout of the 2,317, which obviously had happened right now. And for those of us who had joined this bullish opportunity, please, it's high time you want to be moving all stop losses to secure the current buy position, because we are at a crucial confluence here where price action is back into this ascending trend line. Remember, I did say earlier that we may see price break down and do a retest here to continue the decline. So we are at a very crucial confluence at this point in time. So if you were part of all the buy positions we took this morning, please kindly move all stop losses, secure your position. And if you would ask me, I would suggest anywhere below around the 2,313 and 2,1250 looks more promising to move all stop losses to. Remember, we do want to be giving enough breathing space for price action to move around. Now, if price action climbs and stays above this ascending trend line, then I will feel very confident that the week is going to be closing on a bullish note, and in fact we have multiple levels to maximize the uptrend continuation. We have levels like the 2,325 where I'm looking at adding more buy position, and if price continues to climb and find new highs, the breakout of the 2,335 level will welcome more buying opportunity in this market. So that is what I'm looking at to buy the XAUUSD today. In fact, I have a strong feeling that price will continue to the upside. However, in as much as we're looking out for buying opportunities here, you know how we do it in this community. We also want to keep tabs with the potentials that sellers can also come into play. And in fact, after considering where price action is at this point, at a very important confluence here at the ascending trend line, the question now is, will price action break out of this ascending trend line to continue the bullish momentum, or are we going to be seeing price action do selling pressure below the structure, probably evolve into a double top structure, head and shoulder pattern, whichever case it may be, mark out the neckline to incite a sell-off in this particular market? So we are going to be looking at these possibilities, and this could take about 2 to 3 hours before this formation happen around this area. So we are going to be looking forward to see if we are going to be seeing a reversal pattern like selling pressure around that area to help incite selling opportunities, or will price action just continue the bullish momentum, climbing back above the ascending trend line. Now, there is one more thing I would like to talk about here as regards to selling opportunities from this area if any form of reversal pattern emerges. Now, if any form of reversal pattern emerges around this area and price drops and we are part of the bearish momentum, as soon as price gets into that area between the 2,308 and the 2,304, please, we need to move all stop losses and secure the sell position. Now, the reason why I have said this is simply because of this descending trend line here, which was broken to the upside on Wednesday's trading session. Now, if price comes into the structure, we need to secure the sell position, as we may be seeing the beginning of another wave of bullish momentum from here too as well. So it's a very important bust stop that will incite bullish opportunity as well. But trust me, I will be with you in the comment section of both my TradingView and Telegram platform to give you updates as at when due. And today we are going to be running the XAUUSD live window, so you want to be part of that session so you can be part of us in real time, monitor the price of the XAUUSD. And for those of you who do not know, the XAUUSD live window is a platform where we come together to monitor real-time price action on the XAUUSD, and this happens kicks off 5 to 10 minutes into the New York session, and it lasts for about 5 to 7 hours depending on the volume of trading activity for that particular day. Now, the link to the platform, well, at the end of the session, once this session closes, you will be seeing the link to the XAUUSD live window. I encourage you to click on that link, click on the notify me button so you can get notified as soon as we come on live. So I look forward to seeing you all in the comment section on that platform. So this is my simple view on the XAUUSD for today. I do hope I made myself very clear, but if in any way you have some questions or you need some further clarifications, feel free to let me know in the comment section. So as a result of that, I will be taking the next 10-15 seconds off. Let's see if there are any questions whatsoever before we start rounding off on today's Forex Morning Mastery. And do not forget to give the video a thumbs up. Your likes are very important to me, and like I said earlier, it's one way you are helping this community to grow. The more likes we give this video, the more the algorithm will promote the video to a wider audience of traders who may find this content beneficial to them too. And thank you very much as you do so. So let's make the like tally with the number of people on board. So we have some people who are yet to click on the like button. please, this is the cheapest way you can actually help this community to grow, and thank you very much as you do so. So let's see if we have any questions before we start rounding off on today's Forex Morning Mastery. See you in about 10-15 seconds. All right. So in the absence of no questions, I want to assume that we are all on the same page, and all I've said so far has been quite explanatory. Okay, I see a comment here from John Alabi. Hello, John Alabi. Good morning to you. Glad to have you around with us this morning. And it says here that just thinking that because today's Friday, there might be some profit-taking activities. Yes, I did talk about this earlier. And of course, we took that into consideration while reviewing all of the assets we are looking at for this week. And what do we mean by profit-taking activities? The chances that price action may go the opposite direction of the prior leading price action as market participants close in their position. So we also took this into consideration as well, John Alabi. I hope that is clear. Or is there anything to that inquiry that I don't know? So let me know so that I can make more justice to it. All right. So with that being said here, we have had a wonderful day, wonderful week. In fact, though we had some losses, we had a couple of losses on the GBPUSD. I think we had one on the XAUUSD. And on the USOILSPOT, we did tremendously well this week. So we are on the positive side of our portfolio. And for those of you who were able to stay faithful to our analytical approach, well done and kudos to you guys. And let's see how today is going to be playing out. Are we going to be building on the profit we had made so far this week today? Let's see what is going to be happening. So I encourage us all to exercise patience at every point in time and allow our structures to mature. So today we looked at three financial assets. We looked at the USOILSPOT, we looked at the GBPUSD, and of course the XAUUSD, all of which we were able to identify simple trading setups that will guide our trading decisions for today. And I do hope we marked out these levels accordingly on our chart, as we will be needing them as a reference point to guide our decisions for today. And for those of you who are joining us for the first time today, I do hope you are able to gain something from today's session. And if you did, I look forward to seeing more of you. Same time, 9:05 a.m. West African time on Monday, 8:05 a.m. UTC, as we come to start the week on another positive note. So trust me, the more time you spend with us in this community, the better you get to comprehend my analytical approach. So it might look a little bit tricky at first, but trust me, the more time you spend, you get to understand how this works, and of course it will also enhance your own independent trading decisions. So I see you, John Alabi. All right, I'm very grateful that that is clear. All right, so with that being said, I would like to wish us all the best of luck today, and I look forward to seeing you all in the comment section of the XAUUSD live window, and of course on both my TradingView and Telegram platform. So I wish you all best of luck today. Trade smart, trade consciously, and do have a wonderful evening, and do have a wonderful weekend. Now that reminds me, for those of you who are yet to subscribe to the channel, I encourage you to do so, as I will be sharing a couple of videos during the weekend highlighting what my plans are ahead of the new week, and of course you do not want to miss out on that one. So click on the like button right away, click on the notification bell so you can get notified as soon as I drop new content and videos. See you all. Bye bye.